Given the nature of the financial services industry, the financial services industry remains the sector as one of the most vulnerable to fraud. For the sake of simplicity, I have split up the financial services sector into three areas: banking, insurance, and capital markets. Now, from an Indian perspective, if we see all these three sectors, we'll notice that the maturity or the sophistication level of the fraud management framework in each of these three sectors is directly proportional to the maturity of that sector. Today I'm going to be talking about the insurance and capital markets and give you a perspective of fraud management in these sectors. I will start with the insurance sector first. At the turn of the last century, we saw the entry of private insurance players both in the life and non-life side. They were primarily attracted by an under-penetrated insurance market, a young population, a booming economy, and just a huge opportunity. So for the next decade or so, what we saw was a focus on growth, and more growth. However, the inherent nature of the industry, the decreasing ethical quotient in society, the retail nature of its business, the lack of availability of appropriate data, the lack of maturity of processes have increasingly exposed the insurance sector to frauds of all sorts. But increasingly we are seeing that the insurance sector, along with its different stakeholders, including companies, third-party administrators, and the regulators, are taking baby steps to having a more effective and efficient fraud management framework in place. Based on our experience in dealing with frauds across the insurance sector, we would want to highlight four key areas that are most vulnerable to fraud. The first and foremost area vulnerable to fraud is claims management. Insurance sectors across the world face an increasing amount of fraud in the claims management area. In India, especially on the non-life side, we have seen that claims to premium ratios are in the range of 90 to 110%. So claims is clearly a big area across the life and non-life space where insurance companies face the fraud risk. Another area that tends to slip under the radar is investment management. Now, globally, if you see, insurance companies across the world are one of the largest asset managers. In India, apart from a few private life insurance companies, most of the insurance companies tend to have very small corpuses, and hence investment management does not figure in their scheme of things from a risk management perspective. But as these companies grow in size and scale and attain financial muscle, we'll see that they will have a huge corpus to invest. The byproduct of that is obviously it will lead to investment management frauds. So maybe 5 to 10 years from now, investment management will be as big an area in insurance from a fraud risk perspective as it is in the capital market space now. The third area that comes to mind, and it's fairly intuitive, is the sales and distribution area. Insurance companies in India have a really complex distribution model with a variety of players, agents, surveyors involved. They also have a huge branch network with entry into tier B and tier C towns, as well as the fact that they have lakhs and lakhs of agents on the field who represent the company. So sales and distribution management is another area where they face fraud risk. Given the complex nature of the insurance business, the insurance industry is required to deal with a lot of third parties, which range from vendors, surveyors, garages, hospitals, medical associates, to a variety of players. So third-party management is one critical area where insurance companies face the risk of fraud. Another area, which though strictly not a vertical or a function in the insurance company, but is more as a horizontal across the insurance value chain, is regulatory compliance. There are, in an increasingly globalized and volatile world, there are two things happening. One, regulators are clamping down and strengthening regulations. And secondly, we are seeing the emergence of regulations which have cross-border jurisdiction. So regulatory compliance, whether be out of the KYC or AML sort, or be it in the nature of bribery allegations, is also another area which is also another risk that insurance companies tend to face. Given our experience and expertise in dealing with frauds in the insurance space, I would just like to highlight a few trends that we are seeing across the sector. Clients tend to come to us for support across the fraud management spectrum, right from setting up preventive mechanisms to detecting frauds, to helping them understand and rectify compliance breaches, to carrying out full-blown investigations. I would like to just share some of the key trends and themes that I've seen from the market and from our discussions and experience with our clients. What we are increasingly seeing is the use of technology, whether that is in building complex technology solutions and fraud analytics models to deal with claims right at the time of claims notification, to carrying out complex analytical exercises to identify red flags right before it acquires the nature of a big fraud. So we are increasingly seeing the use of technology. Another area where the insurance industry seems to be moving is the setting up of special investigation units, or SIUs, as they have in the banks. What insurance companies are increasingly doing is taking our support to set up special investigation units, which act as really special investigative cells to carry out investigations in insurance companies, ranging from claims fraud to investment management fraud to sales and distribution issues. Another area where clients are seeking our support is setting up of a robust reporting mechanism. This reporting mechanism not only includes reporting paradigms which are required by the regulator, but also includes creating exception reports and other areas which will help highlight red flags right at the beginning before it becomes a much bigger issue. We are also helping our clients set up an effective and efficient whistleblowing framework, because based on our experience, around 60% of frauds tend to get detected on account of a whistleblower complaint. So whistleblowing is another area where clients are seeking our support. Clients are actively seeking out our support in carrying out regulatory compliance reviews, not only dealing with areas like KYC, KYC and AML, as we have seen in a recent episode where an online portal exposed issues across the Indian financial services industry, but also relating to international laws like the UK Bribery Act and Foreign Corrupt Practices Act of the United States. One more area that the clients are actively looking for our support is on the preventive side, because it is said the best way to investigate a fraud is to prevent it. So clients are increasingly taking our support in building customized solutions across different areas so that fraud gets prevented in the first place. We are also helping clients set up comprehensive fraud management structures, including writing their comprehensive anti-fraud policy, putting governance mechanisms in place, loan staffing, and also helping them set up their SIUs. So all in all, what we are saying is the fraud management framework across the insurance sector is a work in progress. However, based on learnings that they are taking from other sectors like banking and making enhanced use of newer technologies and newer operating models, they are moving towards a more robust and fit for purpose fraud management paradigm. Now I'll be talking about the fraud management framework across the capital market space and the key fraud risks that this sector faces. From a sophistication or a maturity of the fraud management framework perspective, the capital market sector is the least mature. Moreover, it is a highly complex and technical area, so there is very limited understanding of frauds that can be committed and the way in which frauds can be stopped. However, based on our experience working with different capital market entities and the regulator across the space, we identify there are 4 key areas which remain most exposed to fraud in the capital market space. The first and foremost fraud risk that the capital market sector faces is market abuse. There are a variety of ways in which market abuse can take place, ranging from price manipulation to circular trading to cartel trading. The next risk that typically entities in the capital market space faces is leakage of confidential information. Now this can manifest itself in multiple situations, ranging from front running and insider trading. Another area where the capital market sector faces risk is in irregularities in settlement operations and misuse of client funds. Based on our experience in working with capital market entities, I will outline some of the key themes or some of the key developments that we are seeing across the capital market sector with regards to combating fraud. As far as combating fraud in the capital market sector is concerned, we follow the 3C formula: controls, compliance, and culture. I will start with the controls aspect. Now, controls in a capital markets landscape can be across 3 multiple areas. One is physical access, second is around process, and third is around monitoring. I'll deal with each one of them in a sequential order. In terms of physical access controls, since information is paramount and information is more sensitive, it is critical to have robust physical access controls in place. This can include aspects like restricted access to the dealing room, non-use of mobile phones into sensitive areas, having cameras installed in specific locations. This can also manifest itself in areas like recording of dealing room conversations and regular monitoring of that. The other element that I'm going to talk about is process controls. In process controls, it's typically extremely important, especially on the operation side, to have a maker-checker concept, as well as have an independent team which will run analytics, which will help us to identify any red flags that tend to come out. From a monitoring controls point of view, it is critical to have either a member of the risk team or the audit team conduct regular and surprise audits in the dealing room area and the settlement operations area, as well as it is critical to have a robust MIS reporting system in place to identify exceptions at the earliest. The second area that I'm going to talk about, or the second C that I'm going to talk about, is compliance. Now, in a sensitive area like the capital market space, it is critical to have compliance in spirit as well, not just in letter. In order to have a robust compliance system, it is critical to have strong policies and procedures in place. Just to give you an example, for example, in case of declarations that need to be made by fund management staff in a financial institution, it is critical that this process is robust, fit for purpose, and done on a regular basis. Similarly, the policy framework should also conduct surprise audits of the investment details of not only the concerned person but also his spouse, so that we have a comprehensive view on the investments of the particular personnel. Now I come to the third component, which is culture, which is perhaps one of the most difficult to build up. It is $1 million question for most companies, not only in the capital market space but across other industries, as to how to build up a culture which discourages fraud and rewards ethics. The first and foremost is tone at the top. The entire tone and messaging of the top management with regards to fraud should be that there is zero tolerance to fraud. The other areas where companies need to show this is making an example. In case there is a instance which happens in which some of the employees are involved for fraud, don't brush it under the carpet. It is critical to ensure that a thorough investigation is done, action is taken, and this action is communicated to everybody in the organization. This sends a strong message to potential fraudsters that this is an organization which takes actions against fraudsters and does not believe in brushing things under the carpet. One of the other things that can be done on a consistent basis is regular engagement and training sessions with the employees, so that the message of anti-fraud and message of ethics and compliance is continuously communicated to all and sundry. So all in all, what we are saying is, at least as far as mitigating fraud in the capital market space is concerned, it is a long journey. All the other stakeholders, including the regulator, are trying to do their best to ensure that the risk of fraud is mitigated. However, it will take some time before we can reach a place where we all can be satisfied.